Wall Street is getting more and more bearish on Tesla after the company went through multiple rounds of price cuts, which ultimately hit its gross margins. Jefferies analyst Phillipe Houchois is one of 7 analysts to downgrade the stock, and he joins us now. Phillipe, great to have you here with us today. When you look through this most recent quarter for Tesla, dig into the numbers, and ultimately come out to the street, hey, something's going on here, not happy about it. What is alarming to you most about the company?
Well, I think there was, even though there was not the main scenario, there was a scenario that maybe Q1 would be the trough in margin, and from there we can see an improvement. I think what worried me a little bit is when the CFO who told us early March that there would be 20% gross margin, they missed by 1 point, all happened in the last few weeks of the quarter, and it seems like a lot of it seems to have been pricing. And we saw initially a lot of elasticity response to the price cuts, and it seems to have kind of softened as the quarter progressed. So there's a question mark still around, though, how responsive demand is to the price cuts that we're seeing right now.
And if there is a demand problem, Phillipe, it's Julie here. What is the demand problem? Is it competition? Is it just, that the Tesla's not as sexy as it once was? Like, what's going on there, do you think?
Yeah. Well, we think, part of the reason we decided to downgrade the stock is we look at the product is very, very impressive. Yes, there is competition, but there was always going to be competition. And as Musk confirmed, that we should be looking at Tesla as a market share progression in autos, not just the world of EVs, because they have to lose share in EVs, otherwise there's no EV transition. So that's itself. But I think I look at Tesla, so it's very much an engineering-driven, technology-driven firm, the way they operate. And maybe they've been a bit lighter or less competent in terms of thinking, what does it take to keep a consumer product alive? How do we manage transition? How do we widen the offer in a way? And how quickly do we bring in refresh of the models or new models to expand the range a little bit? And I think that as the market softens, we have more recession fears, affordability is a concern, then you've got a bit of an air gap, I guess, in the growth trajectory of Tesla.
You've got the CEO of Tesla, of course, pounding the pavement, and Elon Musk, and begging for one thing right now, even via Twitter openly, and it's for more lithium refineries to start up and more entrepreneurs to go into that instead of launching some new tech company. How much is lithium baked into even the bear case at Tesla right now?
Mm-hmm. Well, we saw a big spike in lithium, and it's been coming off. I guess one thing about mining or refining is if you need more, you look for more and you invest more. So I think there's the risk on the lithium situation is not, as Musk said a number of times, it's not the sheer availability of the material. It's getting it in a process through a process that is manageable, that can be scaled up, and you are going to have probably mismatches in the timing of demand and availability. I think there was a spike in lithium as we kind of looked at an acceleration of EVs. There was a bit of a lag in supply. Now supply is improving, or the investment is improving. Lithium has edged. So I think we're going to see some volatility in the timing mismatch between supply and demand. That's to be expected on lithium, is to be expected in other materials as well, I think.
Phillipe, you spoke a minute ago about broadening out the offering, right? And there was some anticipation maybe of a lower price vehicle coming at some point. Instead, it feels like we've heard more about the Cybertruck finally coming out. What are the stakes here for that lower price mass market offering from Tesla?
Yeah. Well, the first point I would make is first, what is unique about Tesla and very, very important, I think, is this model concentration, trying to get the maximum amount of market share out of a relatively concentrated product lineup, because that's the key to what I would call hyperscaling. If Tesla needs 100 models to gain 10% market share globally, well, it's the same thing as Volkswagen, and what's the point? So there's always going to be this work towards trying to maximize the volume of every model, but at the same time, they only operate in a small part of the market. So there are two things at work. There's need to expand the model lineup to cover more of the market, and there's need to maybe manage the life cycle of those products a bit better, and develop tools to basically have a smoother progression in growth and cash flow and earnings. And that's been kind of a weakness of Tesla, as they were focused on the product, on getting the product right, the engineering, the manufacturing, and they need to kind of maybe broaden a bit of their scales. Now, Cybertruck is coming. We still don't know how much that product is going to cost, and whether it's a $50,000 truck or a $100,000 truck will have a major impact, of course, on the volume. And hopefully we get more of that sometime in the third quarter.
Yeah, Phillipe, just quickly, is there anything that you think could reverse the recent slide in the shares in the near term?
Well, I think we need to see, at some the elasticity kind of respond, and we need to see the work. I think what's happening at Tesla is effectively they're growing. They need to, on our numbers, they need to grow 30% per annum to actually absorb the fixed costs they built up to make more cars. So for them right now, they're in a phase where they need to get that growth, because that avoids being fixed cost being a headwind, and that volume growth also gives them an edge to reduce variable cost. But I think it's an ongoing process, and then of course the IRA subsidies will start kicking in and will help as well. But I think it's Tesla has always been about the affordability. For a while, they were expensive cars; they were seen as premium cars. Their mission of Tesla is to make cars more affordable. So right now they're cutting a price, improve affordability. You need to get the cost to follow, and whether it's commodity cost or volume leverage, all that is going to contribute. We just don't know exactly when the trough will be, or when we start to be looking at upgrades to earnings as opposed to flat to down, which is right now the market sentiment.
Right, as you said, it could take some time. Phillipe, thank you so much for your time this morning. Phillipe Houchois, Jefferies Managing Director of Global Autos Research. Thank you.